Alrighty, what's going on, guys? It's Ricky with Technical Solutions. So thank you guys again for joining us for another helpful video. So I hope that you guys could see my screen and everything is good to go. So I just wanted to talk about a little bit of a topic that I think is very relevant, especially in the current kind of time of the year that we're at right now. So if you guys can see, I've personally been talking a lot about earnings. There's been a lot of other YouTubers talking about earnings. I just wanted to make a video very simple, and this video is not pre-recorded, so I can, there's a couple people that thought it was pre-recorded, so I can say, hey, what's up, Marco, Arnold, and all that stuff. So just wanted to let you guys know that, earnings calls are in session right now, right? And because of earning calls, I've personally taken into, account that this is a time of, like, a session that within the year that I really like to trade because of how far stocks can oversell, which really presents huge opportunities. I'm first going to allow you guys to do your own research. First of all, my name's Ricky, right? We have 3 rules within our group of Technical Solutions. You should not invest based on other people's opinion. You should not invest just because if stocks you don't understand, and then you should always have a plan when investing. I'm sorry that I messed up a little bit, but yeah, just wanted to cover a set of kind of guidelines that I choose to follow when it comes down to trading stocks during the earnings, some best practices, some mistakes, and I'm willing to share both of them with you because I want to make sure that you guys don't have to make the same mistakes that I have, and also I want to share my best practices with you as well, as I hope that they can guide you guys in the right direction. So the first link in the description, it gives you guys like a brief little description of kind of what it is, and it's a link to NASDAQ, to their actual earnings schedule. So you can actually have access to, when all these earning calls are going to take place and everything that entails with those earning calls. Why is that so important, or why is it really important to know when these earning calls are going to be taking place? Well, I'm going to talk to you guys about that. So if you don't want to look at the calendar and you want to scan for certain stocks that meet your criteria, I have a specific scanner that I use that it's a percentage change swing trading scanner. A lot of the members that are part of my mentorship choose to use this specific scanner to either identify stocks that are showing signs of a consistent uptrend and that are oversold, and that offer a percentage. The easiest way that I can put into example is kind of like when we found, what was it? EFX, I believe. So EFX, when it had that initial drop, no, it was actually Shopify. It was Shopify when it had that initial drop. So these are the type of stocks that we try to look for. I'm going to zoom all the way out. And as you guys could see, this is Shopify, multi-billion-dollar company, I'm pretty sure. And I'm going to look at 180-day analysis. Again, I'm going to try to make this pretty quick when it comes down to breaking this down. Showing signs of a consistent uptrend, so very good quality company to invest in long term. But then it had this huge sell-off. When I called it out, if you guys look at my top stocks for September, I believe, it was down to $93. And it had a huge sell-off. And these are the type of kind of stocks that I tend to look for when it comes down to stocks that offer a lot of opportunity, that are good quality companies, that are down a lot based on their normal trends. So they've dropped a lot, so they're oversold. And the RSI indicator is a great study to be able to filter those specific stocks for. As well as I try to focus on stocks that are above EMA, where I wait for that confirmation. So I set up these certain rules, and I'm not too sure if you guys are going to be able to see all of them. I hope that you are. But one of the first rules is, you could either find them by participating in the series of group chats that are available. Obviously, I have the group chat of Technical Solutions. We have a little bit over 52,000 members within our group. That's the 5th or 6th link in the description. We'd love to have you there, but you guys definitely don't feel like, that you have to. Altogether, we scan for stocks, or we either talk about the different stocks that we see value in. So I think that's one of the best ways to be exposed to stocks that are going to be seeing huge margins of losses that have solid uptrends, and you're trying to identify stocks that meet this kind of the similar trend where they show a consistent uptrend, have huge sell-offs, but are very reputable companies and will most likely recover. If these huge sell-offs happen with DRYS, this thing came from, because of all its reverse stock splits, it's most likely leading to the price of zero, right? Therefore, is DRYS going to recover? I can't say that it's not, right? Because anything's possible. Well, most likely because of its trend, it's not going to recover. It's showing that it came from $2,000 all the way down to $4.30. So obviously, this is a very bad company when it comes down to investing long-term, in my opinion, which shouldn't really mean anything to you, right? But when it comes down to Shopify, or let me give you a better example, CRR, I want to give Ferris, he's part of our Technical Solutions group chat, and he does a very good job finding good quality companies when it comes down to solid trends. And one of the things that he identified and that he called out was the support at $6. I'm not too sure if he was the initial person that found this specific stock, but he identified a solid trend at $6, and he waited for the confirmation of bounce, and today it had the bounce and it went to highs of almost $8. That's huge when it comes down to these technical bounces. Let me give you another example of a stock that goes according to these similar trends, especially after its earnings. What was it? Let me see if I can actually pull it up. Let me actually give you an example of one like this. One before it goes through the bounce and one after it goes through the bounce. So I think a perfect example was EFX though. So EFX was one that had a huge sell-off, and because of that huge sell-off, grew this huge margin of profit, and then it broke above the EMA and it started trending up, which offers great opportunity. Let me talk to you about one that hasn't built this complete cup trend yet, but still offers somewhat opportunity once it completes it. And that stock would be, let's just say AMD, for example. This does not mean that you have to trade it by any means. It just has a huge sell-off right now. It's a very reputable company because of its earnings. It did hit its reports, or did hit its expectations, but it did not actually, because of its guidance, overall, it just had a huge sell-off. You guys can look into it, really getting into detail, but it had a huge sell-off. It went from highs of almost, $15 all the way down to, I think today it hit lows of like $10.60, something like that. So what is a possibility for AMD to happen? What I suggest, or what I personally try to buy in AMD right now because of how low the price is, no, because there's no initial confirmation, being presented that AMD is showing any signs of recovery. Based on, looking at AMD big picture when it comes down to, a one-year analysis, I can see that, AMD will most likely recover based on its previous trends. If you could see right here, these are known support levels at around $10 to $10.80. Does that mean 100% that I'm going to invest based on that? No, and that's why we just have to wait for that confirmation. But this is why I tend to see these stocks that after their earnings have huge sell-offs that are reputable companies. Another example is when it did hit its earnings earlier this year. It did not actually hit its expectations for its earnings, had a huge sell-off to about $10, and then started showing signs of an uptrend. That shows a great example of what can happen with a reputable company. That AMD being a multi-billion-dollar company, that it has huge sell-offs, which is really bad for long-term investors. But for those investors that never, took a position on AMD when it had that sell-off, and we wait for the confirmation for AMD to start coming back up, the opportunity and potential for profit that this specific stock offers, let's say we wait for the confirmation until it breaks above $11 and we try to sell at $14. Again, this is for a multi-billion-dollar company. That's 21% potential for profit. It doesn't mean 100% that it's going to recover in 1 or 2 weeks. It might take a month or 2 months for it to actually recover. But the potential is there. It's just waiting for the confirmation and making sure that we're investing in something that's showing signs of an uptrend. So with that being said, the second thing that I like to focus on is identifying support and resistance. So that's just becoming familiar with the trends that are being presented. So for AMD, it would be something such as $11 or $10, and the resistance at $14. Just knowing the decent margins of profit. A lot of people are not going to touch AMD until it breaks above $12, as that was a very common support level, which 100% makes sense. So I have my alert set at $12, and I would like to think that once AMD breaks above $12, it would become a little bit more relevant, and it's actually starting to recover the losses that it experienced at a very quick pace. So that's really just it when it comes down to identifying support and resistance. And then the third thing is wait for an uptrend and a confirmation. I think this is something that I've made a mistake on before. When it came down to originally taking my position on AMD, I did not wait for its initial confirmation. and it led me to take a position on AMD, and now, still holding that position because I don't need the money that I've invested in AMD, and I truly believe in AMD and what it is that it has to offer, but that shouldn't mean anything to you. I should have waited for the confirmation. I should have waited for a solid uptrend, and I should have waited for it to have that full sell-off, and I did not. And all the news and all the hype is very relevant right now for AMD, and that's why it continues to depreciate in value. Once that bad news on AMD dies out, again, all that hype, just as quick as a stock can go up, it can go down as even quicker. So with that being said, I'm simply waiting for that news to kind of die out, for the volume to be a little bit more relevant, and for the price to actually start catching up with itself and then start picking up. So waiting for that initial confirmation on a 180-day chart or a 1-year chart is something that I find to be very effective when trying to take a swing position on a specific stock. So I hope that that's something that can guide you in the right direction as well. And then the last thing is formulate a plan. So again, we talked about scanning for stocks or looking at the link that can show you all the stocks that are going to go through their series of earnings, waiting for the sell-offs, being patient and making sure that we're waiting for the confirmation of the uptrend. And then once it starts indicating signs of an uptrend, right? So let me give you an example. What was it? ESPR. ESPR confirmed the uptrend. So big picture, ESPR offers a lot of potential for profit. It's been continuously showing signs of an uptrend. A previous support is around $43, $44. Previous resistance around $50 to highs of almost about $60. So with that being said, it confirmed the support that it had about $43, $44 on Friday. It did have a sell-off, which we perfectly called out. Now, all we were really waiting for was for it to kind of pull back a little bit and then to consolidate, and that's what it did today. So I think as long as we continue to hold at above $44, again, I'm going to wait for the confirmation. $44 to $45, ESPR is one that I would personally see value in when it comes down to a potential swing position. We identified the margin of the sell-off that it had. We waited for the bounce, and then we were formulating a plan on an entry, exit, and stop loss. The form of risk management is always very important, because the only way that you can really grow your account is if you can keep your losses small and keep your profits much greater, right? Even if you end up growing your account 5% at the end of the month, you're still doing something of some form of risk management. So I'm sorry that this video ended up being maybe a little bit longer than expected, but I hope that it can really guide you guys in the right direction and giving you guys a little bit more of a resource when it comes down to being exposed to specific stocks that are going to be going through a series of earnings reports, and that you guys are at least aware on how to properly prepare yourself for these earnings reports. So it's not just, one of the things is AMD did end up hitting its, target price point for its actual earnings, but it still dropped, 20-30% plus from its initial price, because no, it wasn't 30%. It was about 15 to 20%. And the reason why was because of its guidance. I personally don't feel comfortable holding a specific stock during its earnings. I was swing trading GNC right before its earnings. I, cut my losses. I lost like 5 cents per share, which is nothing. But realistically, if I would have held that position because I thought GNC was a reputable company, it went from $8 all the way down to $6.50, I think. And realistically, it's all about that risk management, not just hoping what happens, but actually, looking at the big picture and seeing, is it a safe position to take when it comes down to holding the stock over its earnings. I don't want to, you guys figure out your own way on what it is and how it is that you guys want to invest in something, but I hope that this breakdown can kind of put it into perspective on, how profitable earning report or earning season can be, because all these reputable companies that are showing signs of a consistent uptrend have huge sell-offs. And it's when those sell-offs happen that when we wait for the confirmation and we wait for that uptrend, we can formulate a plan that we can profit off of their recovery. And that's simply the approach that I've been trying to take within the next couple of weeks. Something that I've learned is that you have to be very patient, and a lot of these stocks don't bounce as quick as others. And it's because some take a little bit longer to consolidate and then to start picking up. So you might want to be a little bit selective with the stocks that you choose to invest in, because some might be, taking 1 or 2 weeks before they actually start to recover. And like we saw with CRR recovered within 1 day and it bounced right away. It just comes down to demand. And some stocks are more relevant than others. It's just all part of the game. But just invest in stocks that you understand. Don't invest based on other people's opinion. And please make sure that you formulate your plan and that you do your own due diligence when it comes down to identifying potential in the stocks that you choose to invest your hard-earned money in. So thank you guys again for everything that you guys do. All the links are down in the description. If you guys would like to be part of my mentorship program, it should say link number 1, and we'd love to have you as a part of the lesson library and mentorship program. For all those that are part of it already, I have one of the Q&A chats with you in about 12 minutes, so I'll see you guys there, as well as for all those that are part of session 2 for the November session of the mentorship program. You guys should be getting an email today, so please check your spam folder and please check just your inboxes that you guys use to sign up for the course itself. Like always, guys, let's make sure that we end the year on a green note. Take care.